Hi, I'm Francois Terrade, Global Head of Structuring at Demica. Today, I'm going to explain how trade receivables securitization works in practice. It starts with a company or a group of companies and their operational subsidiaries, typically in different countries. These companies supply their goods and services to their clients domestically or in other countries. We call them the sellers. The receivables are born. The sellers will issue invoices and will typically grant payment terms to the debtors, generally between a few days and 2 months, hence creating a working capital need for the sellers. The sellers will therefore approach funders who can fund these trade receivables arising from their operations. These funders are typically very large funds that can reach very cost-efficient funding on the commercial paper markets. However, they generally do not purchase receivables directly from the sellers. They usually provide finance by purchasing notes or providing loans. For that reason, one creates a special purpose vehicle, or SPV. It is a legal entity whose sole object is to buy receivable from the sellers. To be able to do this, the SPV will issue notes that are securities secured by the trade receivables. These notes represent the economic value of the invoices and are subscribed by the investors who provide funding. With this cash, the SPV can pay the purchase price to the sellers. There are different types of notes and investors. Senior notes will have lower risk and will be supported by junior notes that will bear the expected risks on the receivable, such as non-payment by the debtors and by the sellers in the case of rebates or claims. On due date or thereabout of the receivables, debtors will pay the receivables on dedicated accounts of the sellers, who keep the commercial relationship with their clients and continue servicing receivables. The collections will be swept to the SPV, who will use them to purchase new receivables. Receivables can be purchased monthly, but also as frequently as daily. If more receivables need to be purchased, then new notes will be issued up to a predetermined amount. If there are less receivables to purchase, or at the end of the program, the collections are used to repay the notes to the investors. Demica enables the whole process. Daily, we receive the receivables data automatically sent to us by the sellers, the RPs, and identify which receivables can be bought and funded by the investors. We provide information to the sellers and to the investors on the performance of the portfolio of receivables. We also generate all the investor reports that include discounts and funding calculations. Demica makes it happen.